waste, and we're talking about financial waste. First, we're going to say a quick prayer, and then we're going to get right into it because we're talking about earnings per share. Dear Heavenly Father, we thank you for bringing us here tonight. We thank you for the financial education that we'll receive right now. We ask that you let it fall on good ground and that it reap a harvest of 100-fold, not only in our minds, but actually in our finances, Lord. Let it teach us so that we can make better investments, so that we can make wiser decisions and be better stewards over what you have given us financially, so that we can be a blessing to others and not just to ourselves. All this I pray in Jesus' holy name, amen. So, we are talking about earnings per share, and AJ actually asked me to talk about this. Now, earnings per share is a way of gauging if it's a good investment. It's not the only way, and it's not the one way that you should use, but it is something that you can use to find out if you're making wise investments. So just to back up a bit, so that you know that this comes from stocks. And so stocks, companies issue stock to raise money. They're trying to further their business, so they actually use that to raise money. Shareholders have a claim to a part of assets and earnings. There's common stock and there's preferred stock. Trust and believe you'll only have the common stock until you become a big baller, and then you'll get some of that preferred stuff. It's sold on various stock exchange. So even though you can buy through Stash, Webull, whatever other ones are out there, all of those different platforms and all of those different apps, it's actually just on the stock exchange, which is NASDAQ, Dow, all of that kind of stuff. When you invest in stock, when you hold shares, you actually have a right to vote on the company. But sometimes, most of us, we don't own enough shares to make that much of a big impact. So we get things in the mail that talk about proxy vote. So what you're doing is that you're signing over your right to vote to someone who has more shares, so they can make a bigger difference in whatever they're trying to change within the company. And just know, the more you own, the more you control company directions. So like I said, if you were that person that was looking to get a hold of people's vote proxy, that means that, you know what, the more you own, the bigger your voice. So it's not like a consensus. It is, you know what, I have 50 shares versus your 50 shares, and that 50 shares is split up between all these people. So the one with with the whole 50 shares has the biggest voice and can change the direction of a company. Whether he works at that company, whether he's on the board of that company, or whatever it is, he gets to make that decision. All right, so just so you know, common stock. When you own common stock, you have a shareholder voice at a meeting. So if you ever actually wanted to travel to a stockholders meeting, I don't know if they're doing them now because of the pandemic and all of that, but if you ever wanted to travel and actually attend, you have the right to go to a shareholder meeting. You do receive dividends. Now, the people who get preferred stocks, which are usually people that are high up in the company, I believe, if I'm not incorrect, I don't know, but they don't have voting rights. So there is an advantage to having common stock. But then the people who have preferred stock, they have first dibs on whatever comes through. So they have a higher claim on the assets. That means it's like, what is it? When people file bankruptcy, and whoever files bankruptcy first, they get first dibs on whatever comes out of that. And it goes down the chain like that. So if you own preferred stock, you actually get to be the first one in line when money is being handed out. And this is not going to take as long as I thought, so we might be out of here kind of early, unless AJ come up here and ask me some questions, which hopefully if I do this right, he won't have any. But earnings per share is the indication of a company's profitability. One of many indicators you can use to pick a stock. So you do use this to go out and look at stocks, and we'll probably look at one before we leave so you can see what it looks like. And then it indicates the high profits does not mean earnings per share. Does not mean high earnings per share. I'm sorry, I can't even read my own small print. So just because a company has a lot of profits, and you have to go digging through their financials to find out if they do, but just because they have high profits does not mean that your earnings per share is going to be that high. And the opposite is true also. High earnings per share does not equal high profits. So your earnings per share, all you're really asking is, how much am I going to earn for every piece of stock that I own? All right, so earnings per share is net profit minus dividends divided by the number of common stock outstanding. So common stock outstanding is based on how much stock is out there that is within the marketplace. Because where some companies say they have 1 million shares, but only 600,000 are outstanding. So all of the shares that are out there are not necessarily being bought and sold, but they're just there until people come along and buy them. Earnings per share indicates how much money a company makes. I just said this, son. I was getting ahead of myself. Earnings per share indicates how much money a company makes for each share of stock. So if you have five shares, how much are you going to make per share? That's all it is. But like I said, you're using this as an indication of whether you should invest in this company or not, and when you compare it to something else. All right, a higher EPS indicates greater value. So if they have a high profit, that doesn't necessarily indicate higher value, but a higher earnings per share, that does. Go figure that one out. It's just the way of the world. And these are key takeaways for you guys. And let me go back up to the first one. So earnings per share, I do believe that's, yeah. So the first takeaway you want to know that earnings per share is net profits minus dividends divided by the number of common stocks. Not all stocks, but common stocks, not preferred stocks. I'm just hammering this home, common stock outstanding. That's your first takeaway. Your second takeaway is to know that earnings per share indicates how much money a company makes for each share of its stock. Okay? So how much money am I going to make for every share that's out there? Come on. Your third takeaway, a higher earnings per share indicates a greater value. The profit does not indicate the value, the earnings per share does. So remember that. That's your third takeaway. I think I only did 3. And just so you know, we're going to do a basic way tonight, but earnings per share can be arrived at in several different ways. So the one we're talking about is net profit. Like I said, net profit minus dividends divided by number of shares outstanding. Hold on, someone's coming in the door. Hey, honey. So what we're going to look at as an example, we're going to look at the earnings per share for your favorite store. So if your favorite store, and remember we talked about profit not being an issue when it comes to this. So you see that they have $1 million profit, all right? But this is your favorite store. I don't care what store it is, this is your favorite store. And this store is actually paying dividends. So it's paying about $200,000 in dividends. But it only has 10,000 shares outstanding. And say it could be a total of 50,000 shares, but there's only 100,000 shares outstanding. So you got a profit of $1 million, you have dividends of $200,000, and you have outstanding shares of 100,000. That's your favorite store. So your favorite store, your earnings per share is just as simple. The $1 million, I said $1,000, didn't I? I sure did. Don't even invest in nobody only got $1,000. All right. So $1 million minus $200,000 divided by 100,000. What does that mean? The $1 million is the profit. The 200,000 is the dividends, and the outstanding shares is 100,000. So when you do $1 million minus 200,000 divided by 1,000, you get $8 per share. 100,000. What does it mean? Evidently, I can't read the numbers I put in front of me. So it's divided by 100,000. So that's $8 per share. So if you have an existing stock, whatever that stock is, for every, I don't care if the price on the stock is $200. It could be $500. No matter. The earnings per share is only $8. So that's what you're earning every time you do this. And so now we're going to look at your favorite restaurant. Your favorite restaurant has profit of $2 million, still paying the same amount of dividends, but outstanding shares is 300,000. So when we go back and look at the other one, what was it? $1 million versus 2 million. So it seems more profitable, correct? Seems more profitable, but it has more outstanding shares. It has 300,000 outstanding shares instead of the 100,000. So when we look at it, it's $2 million minus $200,000 divided by 300,000. $6 per share. So which one would you rather invest in? So you're going to invest in your favorite store instead of your favorite restaurant. And like I said, this is a very basic way of how you can get earnings per share, but it is an indication of how you want to do research when you're talking about investing. So everything, some people just look at, oh, the stock is going up. You can look at that and you can actually go and look at their financials, because if they're a publicly traded company, their financials are out there for you to see. But when you look at it, like I said, unless you're looking at this, and the thing about it, here's another thing. I'm sorry, let me go back. I should have said, and I didn't put this in here. If they aren't paying dividends, then it's just the net profit divided by the number of shares, and that's the earnings per share. So if, and I don't have the math up here, AJ calculated for me. So if we just did a million divided by 100,000, what's the earnings per share? Numbers? Should what, 10,000 or $10? A million divided by 100,000? I could have done it on my own. We're moving it over 2 decimal points, right? And I don't know if you can use earnings per share when there's no dividends. I didn't do the research on that. I'm going to have to find that out. Are you calculating?
Yes.
What was the number?
So that's 1 with 6 zeros.
Yes. Divided by 1 with 5 zeros.
$10.
So $10 per share. So when you're not paying dividends, it looks like you have an even better earnings per share. So for every share you own. And then, like I said, the dollar amount or the value of the stock has nothing to do with the EPS. It has more to do with the profit, the dividends, if there are any, and the number of outstanding shares. This was just easier. And like I say, we'll look at an example and see if we can find one. I did not bookmark one to find out. Come on. Okay, so when we look at it, and we look at the difference between our favorite store and our favorite restaurant, so the more, it looks like the more that you have to share that company, the less your earnings per share. Does that make sense? So they're both paying the same amount of dividends, but the smaller the pie, the less you get in earnings per share. Okay. So what earnings per share does, it helps you make an informed decision. So when you go out and you decide that you're going to invest in something, regardless of what company you're investing in, you want to use these as one of the key indicators. The other one that I'm going to come back with in 2 weeks is going to be beta, because that's another way you can look at if you want to invest in something. So a lot of times when we're ill-informed, like I was when I started out, and I'm still not that informed, and then that's why the first slide said, based on what I know. But the thing about it is that you want to look at these things, because a lot of people will think, oh, well, this company has been around for a while. Who is it? Pepsi has been around. Coke has been around. Procter & Gamble has been around. But these companies have been around so long, there is no more growth there. So if you look at this as a way to decide if you're going to invest in them, it makes a difference. Like, is it really worth investing? Or should you invest in an emerging market fund, or however you want to do it? So you want to look at the risk, how risky is it, and there's a way to find out how much risk is involved. But then again, you want to look at earnings per share. How much are you actually earning with every time you buy a whole share? I know someone was sharing with me that they're buying Berkshire Hathaway, and Berkshire Hathaway is about two. I know it's less than $300 a share. So they're working their way up to buying a whole share. Now, if you go and look at the earnings per share, because I don't think their dividend is that great. Maybe that's one of the ones that we'll look up. But I don't think their earnings is that great, because Berkshire Hathaway has been around for a long time. Now, this is not the Berkshire Hathaway where I think it's 100,000 per share. Yeah, he has some crazy outrageous one. But you want to make informed decisions. You don't want people coming to tell you, oh, you should invest in this because it's going to be a hot stock. Don't fall for that kind of okey doke. Go actually do some research and find out.
GameStop.
Did you get taken on GameStop? Okay. All right. So, and I keep this one up here because I want to remind you guys, this is a not so fun financial fact. You missed out on 260% worth of growth because you didn't invest in the stock market 10 years ago. Just in the last 10 years, there has been 260% worth of growth. That's why I say, if you're not doing it for you, do it for the babies. That is my thing. So when you're out here and you're making these investments, even if you don't think you're doing a lot, even if it's just $5 or $10 at a time, that $5 or $10, $10 over a decade at 260%, add a zero and put a 26 in front of it. Really? $260? No, I'm sorry, $2,600? And all it was $10. And it's $10 consistently, if you just do it every week or every month. And if you're reinvesting your dividends, that's why that growth is exponential. This is why, if you can stand the risk, don't just stick your money in a savings account. You stick money over there for emergencies, and that's it. The rest of it, as long as you can stand some of the volatility, I'm kind of risk averse, but not so much that I won't continue to invest in stocks. I invest in things that are going to pay me dividends. One of the new ones I just did was, I have to look at what it is, I'll tell you guys. But I look for growth, and I look for monthly growth. And if you guys saw the dividend one we did last time, you see that it doesn't matter whether dividends are paid quarterly, monthly, annually, or whatever. If it's 6%, it's just 6%. So I rather do mine monthly because it gets reinvested monthly, so it grows and multiplies faster versus waiting till the end of the year. So if I can get that $10 spread out and get it like every month, whatever little bit, even if it's just that $1 a month, that $1 a month is now rising in price and buying me more versus how much I own more shares. And so it's better to invest that month to month instead of waiting that quarter and that annual. So like I said, get on out here and do your thing. Come on. And this is something I want you to see, like retirement versus savings. Is that no, hold on. Yeah, and I can't see it because my thing is too small. But when you're looking at it, you're starting early has the most benefits. And like I say, a lot of us weren't educated on finances, and that sucks. Because we have these people out here talking about building wealth, and what they do is they stick you in a 401k, and they limit what you can do, they limit what you can invest in, they cut it off to, okay, the company can, as a company, we can only invest in these things. They penalize you for taking money out. There's just all these different things, and then they tell you to put in. When you retire, then you can draw it out. Okay, so now your money is no longer making money. So you're just kind of like, okay, I'm going to deplete the funds that I have. And then what if you live longer than you anticipated? And I'll use my father-in-law, for example. My father-in-law, all the males on his side of the family died somewhere around their 50s. So Pop retired early and thought, you know what, I ain't got that long because Pop lived another 20-something years. And so he was living off his retirement and about that smidge of Social Security. And so we have to take these things into account. And especially if you're talking about passing on that wealth. It's like, it's not just passing on the monies and the dollars and all that kind of thing. It's passing on the mindset of being able to talk money, being able to talk finance. Not necessarily high finance, but enough to say, you know what, I have passive income. Let's make sure that you invest in real estate. Let's make sure you invest in the stock market. Let's make sure that you have some sort of insurance policy. And I'm not that big on insurance policy, but if it's gonna take your grandkids from the 500,000 you got invested to $1 million just by that one thing, they can now take that half a million and turn around and invest that. Okay, I thank you, granny and grandpa and all that kind of stuff, but now I'm gonna stick another 40 over here and invest it, and I'm gonna go play with this, or 400,000, I'm sorry, and I'm gonna go play with this 100,000. So now you just went from this to having 900,000 invested. And believe it or not, outside of living in the US, a lot of people are doing that, and then what they're doing, they're leaving the country and they're living off the dividends. They never have to touch the principal. So like one of the accounts that I have, I think so far the dividend average, it says my dividend average is $170 a year. And so the way Neil and I look at it is like, okay, what bill do I have that I can pay that's already paying? So say my Disney Channel, $5 a month, that's $60. So I'm now making enough just to pay my Disney Channel. It's something that wouldn't necessarily have to come out of my pocket. And then, okay, say my Paramount is $7. I am now making enough per month off of the dividends to just pay that little bit of bill. But that's still money that I no longer have to come out of pocket and work for. So when you start collecting your dividends and you see what they are annually, as they begin to accumulate, you start looking at what can I pay off now? Or what can I apply this to now? And so, like I said, that's why I like mine monthly, because if I ever were to start drawing down on the regular basis, and because right now all of my stuff gets reinvested, just go and buy me some more of whatever it came out of. But if I wanted to start taking that out, you know what, I'm just use this as my once a month lunch date with my girls. And I never have to touch the principal. And so you start getting in that mindset of living off of the principal, and not, because that's where the wealth is gonna come from. Because, and every time you decide that the next family member comes along and they're gonna add to that, it's like, okay, I'm gonna put another $20,000 over here. So that $20,000 grows to another $1 million for the next generation. And so now you create trust funds for your grandbabies of money that, you know what, every month somebody gets some money. And it's spread out over this way, because they're just living off the dividends. They don't have to touch the principal. It is when people get greedy and decide that I want to live beyond my means and all flash and no substance, that all of that crazy starts to happen. And I like this quote by Benjamin Franklin. It says, an investment in knowledge pays the best interest. So gaining financial knowledge is the best interest for what you're going to do. And I think that was kind of, yep, that was it for the slide. So I wanted to go over here and actually show you guys when we're talking about earnings per share, and don't mind that. I don't either. AJ, give me one of your stocks that's paying dividends. You want to, okay. I know, I love that one. I like the dividends from that one. It makes me happy every, no, that's not it. That noise was bothering him.
Mike is buzzing.
You gotta stand here now. Is it just bothering you, AJ?
Weird.
It's still there, AJ.
Yeah.
I hear it a little.
Well, I can hear it good because I'm right here where this speaker is.
Huh. Maybe he's getting interference from the tablet.
iPad? Okay.
Does it stop when you put your hand on it?
Yeah, there's nothing in there now when he put his hand on it.
Is there a vibration?
Is it the mic stand itself?
No,
It has to be.
that sounds more like a grounding issue.
Ah, so when I'm touching it, it's.
It grounds it. I was about to say, I think it just stopped. It didn't stop for good.
Speaker's not on. AJ, are these speakers not on?
They're on.
I don't hear it coming out of here.
I seem to hear it coming from the back. I don't hear it from over there.
Yeah, I hear it coming from there.
Yeah, it is. We hear something better.
So are you telling me I have to be louder so I can be heard over the static on the stream?
Yeah, I know.
Yeah, that sounds a little worse. You guys tiptoeing through the tulips before you came over?
We were at home, today's his actual birthday, so,
So y'all were chilling at the house.
yeah. AJ's mom and Dave came over and brought him a
Okay.
handful of coffee cake type dessert, and just made,
Like he needs dessert.
yeah, like a whole minute. Something on it?
Somebody wiped it with something that they shouldn't have and messed up the finish.
They used the wrong kind of polish or something.
I don't know, I couldn't notice.
Okay, me too neither. Are we still rolling, AJ?
Yes.
So y'all get to see all of this stuff going on? You want me to hold it? Because he's holding it.
He's holding it. It's not doing it now.
Well, it didn't stop when she held it.
No, it didn't.
She didn't hold it like that.
I didn't, I just put my hand on it.
Like that, but it's not doing it now. Now it is. Now it's not.
All right, big mouth me. Do you hear it?
No.
Okay.
Weird.
Yes.
Unless you know about audio stuff, then it's probably, oh yeah, it's just this.
See, you talked about earnings per share. This is actually Microsoft, and on this one, I don't know if you guys can see it, but this one actually gives you the earnings per share. You don't have to calculate it yourself, and because I'm in the app, I can't make the screen bigger for myself. So it looks like $7.34 is the earnings per share, even though Microsoft is trading at $280 and 98 cents right now. But you would be able to calculate that if you knew the profit. I don't know if they have that on here. I have to squint. Y'all forgive me because I did not bring glasses with me. Like 1.5 or 2. Yay for 2s. And they cute. Ooh, look at that. I can see. Okay. So if we're looking at earnings per share, and right now, this doesn't necessarily show you the profit. You would actually have to probably go dig up their financials to get that information. Let's see. I'm going all the way down here to see what they have and what they. Oh, here it is. No, that's like we were talking about shares outstanding. Here it is right here. 7,531,575. That's shares outstanding. So, and then that's only 69%. So there's still some that aren't even showing here. And then we're looking at the earnings versus estimate, and this is probably dividend. Long term, like they're telling you that the long term sentiment for this within the last 9 months to 2 years was neutral. But right now, it's saying that it's strong, and they're telling you that, you know what, short term sentiment is that this is a strong buy. So if you want to look at it that way. And this is, and like, again, this is Microsoft. And depending on what reports you're looking at, you can either actually calculate the earnings per share or you can look it up. Now, they're telling you earnings per share from last quarter versus same quarter prior year, 45%. So go do that one. It's like, oh, man, I need to buy more Microsoft. Let's see. And their dividend yield is, hold on. That's the payday. Dividend yield is 0.81%, which is the payout of 30.52%. I hate holding this microphone. I was trying to find the actual number so you can see the calculation. But like I said, if you look at it, if you're able to find a report that actually has the profit information on it, the financial information on it, and that's usually in your prospectus. Are you still looking for it?
I'm just, don't like holding the microphone.
I don't either.
Like
I
maybe-
think I'm already loud, so giving me a microphone just seems wrong.
Put it back in there.
It's not there. It's not there.
It's not. Wow, so special. But
It was doing it with both cords though. I had 5 as well. It's like going, whatever is going through the mics. Might be the snake.
Yeah, we got another one in there, so we can switch them out. I don't mean right now.
oh wow, seriously?
I don't mean right now.
Okay.
Someday.
See, someday.
I cannot find a report I actually like so that we can look at this. Let's see. Because I want you guys to see the financials. But just so you know, like I said, if you're investing in anything, more than likely they're sending you a perspective. It was a sucky day in the market. Do you guys see this? All that red?
Oh, that means everything's down, right?
That means a good chunk of it was. The- That's Apple.
Oh, okay.
But yeah, the Dow was down, S&P was down.
Yeah, everybody was down today.
Yeah. So when you get your prospectus and you want to look at that information, like I said, you go and you look at the profit. In profits, you got to dig through the financials. And usually they're giving you the previous quarter of information. And there's so many different stock sites. See, this is giving me the same thing. No wonder this is based off of Yahoo Finance. But depending on where you're looking to get your financial news from, whether you're looking at the Wall Street Journal, if you're looking on here, like I said, I do a lot of looking for stuff on Yahoo Finance. I think Investopedia has some information. But if you're like I say, however you're going to invest, using this as an indicator, also using like the dividend payout, I look at dividend payouts. I want to know I'll try and find ones that are, it's like the higher the dividend payout, the lower the stock price. So you can buy a bunch of them, but then you only get like 8 to 10 cents. Is one of the stocks I bought was, let me see if I have it on here. Was, don't y'all look at my stuff. I can't see it on here. But there was one that I purchased, and it was like $14 a share. But the dividend payout is 6.96%. But you got to figure 6.96% on $14 is not that much. But again, you're able to, if you're buying 10 shares of that is $140 versus not being able to buy any Microsoft because it's $200 a share. You own one share of that versus owning 10 shares of the other one. You're still getting dividends, it's just not this in the same way. So if you're going to look at it from the standpoint of earnings per share, okay, which one is going to pay you more? And like I said, right now, yeah, based on the calculations that they show you as far as Microsoft paying 45%, it's a really hot thing. But again, like I said, everybody doesn't have, you can't go out and buy 10 shares of Microsoft unless you got like $3,000 or $4,000. I don't have it. That's why I keep buying my Microsoft in pieces. But AJ, did that answer all your earnings per share, questions?
Yes,
Did you have any more?
if I can think of.
Okay, so how would you use it now? Are you gonna use it to make better, or not necessarily better, but different decisions?
More informed decisions.
Okay, because I know, that's not what I wanted. I know that, the reason AJ asked is because he was using an app to figure out what it was. But like I said, if you can actually understand where those calculations are coming from and why you're investing in what you're investing in, it makes a big difference. And then the more you educate yourself now, the better informed the next generation will be. And like I said, even if you don't explain anything except what a stock is, baby, that means you own a piece of the company, versus a bond, which means you loan the company some money. So just having them understand that part, and then understanding that instead of wearing Nikes on your feet, go buy you some Nike stock. I was just checking, y'all know I always talk about Morgan and her thing, because I'm mad because I didn't invest when she invested. But Morgan's return on her Microsoft right now is about 71%. It's like she's about to double her money. And I'm like, oh, that just hurts my feelings, but it's her money, so I'm gonna be all right. I'm gonna be all right. So so like I said, that is my lesson for today. I don't know what else you guys wanna know or what you need to know, but like I said, AJ asked about earnings per share. We will also get into, beta. A lot of the websites that you look at, they will show you. Like I said, I was in my Fidelity account and it was showing me what that was. But I'm looking at the stock app that comes with Apple. It won't show you that information. And when you go in and you look here, and if you guys ever want to know what dividends are paid out, you can always go to Yahoo Finance and go to their historical data. When you see stuff like this right here, that means on June 23rd, the dividend was going to be 54 cents for every share that you owned. So if you own 10 shares, you got $5.40. And they do it for every quarter. Is this? Yeah, because this is still Microsoft. And you can see that the difference it made from that one was June, this is December. So they paid 60 cents a share in December. And so it actually fluctuates. They will give you a number. It went back down to 54 in September 2023. So if you go over here and you look at the historical data, you can find what the dividends are, if that really interests you, versus the earnings per share. But you also, oh, there's the other one. This one is paid every quarter, December, March, September, and whatever the other one is. But yeah. But if you go over here and look, what you're looking at is you're looking at the date of the trade, what it opened at that day, what was the high for the day, the low, what it finally closed at. And when they're talking about the adjusted close, because there's aftermarket trading sometimes, but this one was the same all the way through. So when we got up in the morning at 6 o'clock, it opened at 76.16. And see, if there was after hours trading, say like, okay, you see the day before on July 12th, the adjusted close was 76.21, but then it opened at 76.16. That means folks was still trading money after we done went to bed. And that's what you can do when you got a whole lot of money. They hold the stock market for you. I'm just playing. But the fluctuation throughout the day, it ended down because the high was at 76.27, but when it finally closed, it was at 75.80. So whatever you owned, you've lost a few pennies that day. And that's how you look at that historical part. And I think that's it, AJ. That's all I can tell you guys about earnings per share. Wow. So if you, and so here's the year to date, do you guys see that? If you started investing in Microsoft at the beginning of the year, I think this is Microsoft, yeah. No, this is Schwab, SCHD, shows you what I know. But if you started investing in this at the end of the year, when did we start doing this?
Beginning of the year,
Yeah, what did I say?
the end of the year.
Oh, okay. But if you started doing this January 1, you would have made 20% on your return. Okay? Not including the dividends. This is just what you would have made in the stock price going up. Okay? So, That's all I got, I believe. Oh, and see, on this one, AJ, the expense ratio on this is, 6%, which, yeah, 0.06. So, would you still invest in this?
Yes.
Why?
Low expense ratio, it's got dividends,
Mm-hmm.
and I already invested in it.
Yes, this is delicious, this is delicious. So, y'all have nothing else? I have nothing else. I'm trying to just focus on one thing so I don't overwhelm anymore. So that's why we kind of went back over to what stocks were, and then just taking this a piece at a time. We did earnings per share, we can do beta next time. Is there anything else you think we should cover? Because we can cover after covering the basics, it's just about what do you think you want to invest in and how do you make wiser decisions. And this is earnings per share is one of the ways you make a wiser decision. Instead of just looking at, okay, the price is going up. You have to actually look at the news. And so when you look at this one right here, no, let me go to Microsoft, let me show you. Because when you're looking at companies, don't just look at what you see in the numbers. Also make sure that you're paying attention to what's being said about them in the news. They had a good day. So, like they're talking about tech stocks, so something's going on there. It says they're following Microsoft and Apple, so both of them are having something to do. But that one doesn't count. Dow Jones futures awaits. I don't do futures, I don't do options. I want to learn options though. But okay, here's one. Microsoft gains as market dips, what you should know. So they're going to tell you a little bit more about why their stock is doing what it's doing. And you would be wise to pay attention to that if you're going to continue to buy Microsoft. Because if they're doing certain things like with AI or a new software is about to come out, or they're beta testing or doing research and development for something, it's like they may tell you it's going to do something in 2 years. So that might be an indication to you know what, I'm a buy and hold. Because 2 years down the line, this is going to blow up. So, and then bigger tech, Apple, Microsoft, and Alphabet all hit new highs. So they all hit new highs today, even though the market was down. Yeah. The rising stock price suggests that investors are more excited about the company's potential second quarter financial performance. So like you have to, I don't know on here where to go dig, I guess, because I hate looking at little bitty screens. Oh, these are all little bitty stories, okay. What is this? So this is Barron's. Barron's is good for financial news. See, and they make you pay for it. All right, so they're talking about inflation spike. And like I said, you have to take some of these things into consideration when you're investing. So is inflation going to affect the stocks that you own? I don't think, based on just my knowledge of tech stocks and tech companies, I don't think they'll ever get to the point of the bubble like it did when everything fell apart and everybody was starting tech companies and all of that kind of stuff. But it still behooves you to look at different things and see if any new IPOs are out there coming up because they're doing something different. Like I say, keep an eye on what they call the alphabet, because they're looking at Google and Google, Microsoft, Apple, all of them. So what are those tech stocks doing, and are they staying up to date with what they're talking about as far as AI and all of that? Are they keeping pace? So if you want to buy into that, let me see. Alphabet closed at Alphabet is Google, I believe. Good Lord, $2,500 a share. Amazon closed at, it was down 1.1%, 36, didn't they split? $3,600 a share? See, and like I said, I know I keep harping on it, but this is why I'm like, get our babies invested in some of this. Because even if, I think it was Apple or Amazon, which one of them did a split recently, do you know? But when these companies split, so if in the next 10 years, say they split again, instead of your child having 1 share, they now have 2. And then they'll continue to rise. So, Facebook, what is it? Leaving the company's valuation. So Facebook is valued at $1 trillion. Wow. That's why you read the financial news, because you want to know this information. And like I said, I'm just skimming, and I'm gonna go buy me some more stuff. I might not be able to do everything I want to do, but that's all right. But just a little bit at a time, and this is why I suggested Stash for everyone in the beginning. Because if you buy Starbucks on the regular during the week, you can buy $5 worth of Starbucks stock every week, and then start making your money to make Starbucks pay you for drinking their coffee. So that's my thing. That's my spiel. I will upload these slides. Were you guys able to access the slides from last week? Did you see them on there?
I didn't look.
Okay. Were they uploaded
Yeah, they were on the
in church group?
group.
Okay, I just want to make sure.
Oh, the church.
Yeah, loaded them in the church group. So I will do that, the same things for these. And if you guys have any questions, or if you have anything that you want to ask about investments in particular, let me know so I can do my research and make sure I know what the heck I'm talking about. Because otherwise, y'all gonna get nothing.
And the next one's the 27th?
The next one's the 27th, yes, 2 weeks from today. So we just moved up a week because of,
My raise.
oh yeah, that lamb, sweetie, that's all right. So, like I said, next time you think about your favorite restaurant, your favorite store, think about how much, especially if they're franchises. Go see if you should invest instead of spending money there. All right. Dear Lord, we thank you for this opportunity to learn something new, for teaching us about earnings per share. Let us use it wisely to make good decisions and continue to make us good stewards over how we learn this and how we use it, how we incorporate it, and how we teach it to our children. Lord, let us know that you did not mean for us to be poor and broke. So we're going to get rid of this poor, broke mindset. How about that? Lord, we thank you and we give you praise and honor and glory in Jesus' name. Amen.